Hey everyone, welcome back to the channel. If you've been hearing the term DeFi and wondering what the hype is all about, you're in the right place. In today's video, we're going to unpack everything about decentralized finance, what it is, how it works, what makes it different from traditional finance, and how it can be used in real-world applications. Whether you're a developer, a software engineer, or a business leader curious about leveraging DeFi in your products, this video will give you a comprehensive understanding. What is DeFi? DeFi stands for Decentralized Finance. It's a blockchain-based alternative to traditional financial systems, like banks, brokers, and payment networks. Instead of relying on centralized institutions to manage your money, verify transactions, or hold your assets, DeFi enables you to do everything yourself, securely and transparently, using smart contracts. You can lend, borrow, trade, invest, earn interest, insure assets, and more, all without a middleman. And the best part? It's open to anyone with an internet connection and a digital wallet. Why does DeFi matter? Before we get too technical, let's talk about why DeFi is even necessary. Traditional finance comes with several limitations. It's centralized, meaning control lies in the hands of governments, banks, or large corporations. It's often geographically restricted, leaving people in developing regions without access to basic financial services. Transactions can be expensive, with fees from wire transfers, credit cards, and remittances eating into the value being sent. It's also slow, with international transfers sometimes taking several days to process. On top of that, the system is largely opaque. Users typically have no insight into how their money is being handled or where it's going. DeFi flips the script by offering a more open and efficient alternative. It provides global accessibility, transparency, lower fees, faster settlements, and user control over assets and interactions. In short, DeFi democratizes finance, making it open and accessible to anyone with an internet connection. The core components of DeFi. Let's break down the DeFi tech stack. This will help both developers and decision-makers understand the moving parts. Smart contracts. These are self-executing programs on a blockchain. They define rules, like if user deposits X, then lend Y, and automatically enforce them. Decentralized applications, dApps. Apps that interface with smart contracts. They're the user-facing part. Examples include Uniswap, Aave, and Yearn. Tokens. Most DeFi apps are powered by tokens, usually ERC20 tokens on Ethereum. Tokens can represent assets, governance rights, or utility access. Wallets. Tools like MetaMask, Trust Wallet, or Ledger allow users to store and interact with DeFi protocols without giving up custody. Oracles. External data feeds like Chainlink that bring real-world data, for example, asset prices, into the blockchain so smart contracts can react to it. Layer 2S and scaling solutions. Platforms like Arbitrum, Polygon, or Optimism reduce gas fees and speed up transactions, solving Ethereum's congestion issues. Popular DeFi use cases in detail. DeFi isn't just a concept, it's powering a wide range of real-world financial applications. Decentralized exchanges, DEX, like Uniswap and PancakeSwap, let users trade crypto tokens instantly without the need for intermediaries. Here, liquidity is provided by users themselves, not traditional market makers. Platforms like Aave enable lending and borrowing, allowing users to deposit assets and earn interest or borrow funds without credit checks, just by locking up collateral. Then there's yield farming, where users move their crypto across different protocols to earn the highest possible returns, similar to a high-interest savings account, but far more technical and risk-prone. Synthetic asset platforms such as Synthetics allow users to mint and trade on-chain versions of real-world assets like gold, fiat currencies, or stocks. DeFi insurance is also growing, with protocols like Nexus Mutual providing decentralized coverage against smart contract bugs or exchange hacks. And when it comes to payments and remittances, DeFi enables fast, cheap, borderless transactions. No banks or third-party services required. DeFi versus traditional finance. A closer look. In traditional finance, you depend on institutions to maintain records, approve transactions, and hold custody of your assets. For example, if you want to get a loan, you must go through a lengthy process: background checks, credit scores, paperwork, waiting periods. In DeFi, you simply connect your wallet, lock your crypto as collateral, and borrow within seconds. No human approval, no waiting. Also consider the difference in transparency. Traditional banks are black boxes. You have no idea where your money goes after you deposit it. In DeFi, everything is recorded on the blockchain, 100% auditable by anyone, anytime. However, traditional finance has the advantage of regulation, consumer protection, and stability, which DeFi is still catching up on. The developer's perspective: how to build in DeFi. If you're a developer interested in DeFi, here's a roadmap. For developers looking to enter the DeFi space, it's important to start by understanding the blockchain stack, including Ethereum, Layer 2 solutions like Arbitrum or Optimism, and alternative chains like Solana and Avalanche. Learning Solidity, the primary language for writing smart contracts on Ethereum, is essential. You'll also want to get hands-on with frameworks like Hardhat or Foundry, which help in developing, testing, and deploying your contracts efficiently. Working with Web3 libraries such as ethers.js or web3.js is crucial for connecting your decentralized applications, dApps, to the blockchain. Integration with wallets like MetaMask or through Wallet Connect allows users to interact with your dApp seamlessly. Before going live, make sure to test your smart contracts thoroughly on public testnets like Gurley or Sepolia, where you can simulate real-world conditions without risking real assets. Most importantly, follow strict security best practices. Smart contract bugs can result in major financial losses, so use trusted libraries like OpenZeppelin, conduct thorough audits, and consider formal verification methods. As a bonus, participating in DeFi hackathons or contributing to open-source projects on GitHub is a great way to sharpen your skills and gain valuable real-world experience. Real-world examples of DeFi projects. Let's take a quick tour of some standout DeFi protocols that are shaping the ecosystem. Uniswap is a leading decentralized exchange that allows automated token swapping, handling billions in daily trading volume. MakerDAO is the force behind DAI, a decentralized stablecoin backed by crypto collateral, offering price stability without central control. Aave provides a robust lending platform with both variable and stable interest rates, making borrowing and lending accessible to anyone. Curve Finance is optimized for stablecoin trading, offering low slippage swaps ideal for more stable assets. Synthetics enables the creation and trading of synthetic assets, allowing on-chain exposure to commodities, fiat currencies, and even stocks. And then there's Balancer, which combines decentralized asset management with exchange functionality, allowing users to create customizable index funds. All of these protocols operate autonomously through smart contracts and are governed by decentralized communities, removing the need for traditional intermediaries. Risks and limitations of DeFi. Let's be honest, DeFi isn't perfect. Here are some of the top risks. DeFi offers a lot of potential, but it also comes with significant risks that users and developers need to be aware of. One of the most common concerns is smart contract bugs. Vulnerabilities in the code can be exploited by attackers, which is why thorough auditing is essential. Another major risk is impermanent loss, where liquidity providers may end up with fewer assets due to market volatility. The regulatory environment around DeFi is also uncertain, with governments around the world exploring ways to control or restrict these platforms. There are also scams and rug pulls, where malicious actors create fake projects to steal user funds. Even supposedly stable assets are not immune. Volatility can cause stablecoins to lose their peg. And finally, user error remains a big issue in DeFi. Losing access to a wallet or sending funds to the wrong address can result in permanent loss. In this fast-evolving space, education and caution are absolutely essential. The future of DeFi. DeFi is still in its early stages, but the growth is exponential. We're seeing more integrations with real-world finance, like tokenized stocks, central bank digital currencies, CBDCs, and institutional DeFi. Layer 2 scaling, zero-knowledge proofs, and better UX are making DeFi faster, safer, and easier to use. In 3-5 years, you could be paying your rent, earning yield, or buying insurance, all through a DeFi protocol. DeFi is redefining finance. It's not just a crypto trend, it's a new financial operating system that's more open, transparent, and programmable than ever before. Whether you're an individual looking to participate, a developer looking to build, or a business ready to explore Web3, DeFi has something powerful to offer. If you're looking to build a DeFi app, integrate smart contracts, or explore blockchain development, we'd love to help. Reach out to us at contact@techtoast.com or visit our website, www.techtoast.com. If you found this breakdown helpful, please like, share, and subscribe for more deep dives into modern tech and blockchain. Thanks for watching, and we'll see you in the next one.